Welcome to the JD Capital podcast, where we help property investors and homeowners confidently navigate their way to financial freedom. This is Jai Kao, your host, where we'll unpack everything there is to know about wealth building and financial literacy. Happy listening.
All right, guys, welcome back. We've got another episode back on the JD Capital podcast. Today, I've got Aaron and Valley joining us again, and then we've got a co-host. So Valley's going to co-host this one. And a lot of our listeners have been telling us they want to hear more about what are our clients doing? What are the type of scenarios and the deals that we're working on? And today we want to break it down into three key scenarios. So buying an owner-occupier, that seems to be the Aussie dream. Yep. We also want to talk a bit about rentvesting, because obviously in larger capital cities like Sydney and Melbourne, it is harder to afford your dream house. So a lot of the time people are looking at rentvesting. And then the third one is looking at building an investment portfolio. So it could be rentvesting as well, but using their equity in their owner-occupier property or kicking off their rentvesting strategy and building quite a sizable portfolio. And we'll chat a bit about how they can do that and what we're seeing as well. So Valley.
Hello, it's your host Valley taking over for our next episode. I'm actually really excited to host because I want to pick both of your brains, which I think will be exciting. We talk a lot, obviously, face-to-face, off-air, but I think our conversations are really good, and it'd be really great for other people to actually hear it as well. So, Jai, I'm gonna start with you.
Sure.
We've got here. Can you give me maybe one of your latest rentvesting clients, a good example of how they got started, how you're taking them on this journey, and any maybe challenges that you face with them?
Yeah, I think I'll firstly just start off by explaining what rentvesting is for those who don't know what it is. So rentvesting is basically renting where you live or living at home and building up an investment portfolio first. The reason why people do that is because they may not have the borrowing capacity to buy their owner-occupier property. And if you look at it, Sydney as an example, if you want to buy a $1 million property, for example, as an owner-occupier home, you need to be earning about $200,000 of income, right? And you also need to have, generally speaking, at least a minimum 5 or 10% deposit plus stamp duty. So that could be quite a fair bit of deposit size, right? Over $150,000 of deposit. So for those who don't have that and can't get into their property, which is the average median price, by the way, is about $1 million, right? So you generally need to be having about $150,000 to get in. But most people, what I'm seeing is they don't have that. So they adopt a rentvesting strategy, and that's where they can rent cheaper than the mortgage, right? So if their mortgage on a $1 million property is about $6,000 a month, if they're renting cheaper than that, they're actually financially better, right? Because they're saving money on the mortgage, and they don't actually have to pay for any of the holding costs of the property. So they're not paying council rates, they're not paying the water rates. If there's any repairs and maintenance, the landlord pays for it. So renting, if you're spending less than the actual mortgage, so $6,000 a month, if you're only paying, say, for example, $500 or $600 a week in rent, your rental expense is much less than the actual mortgage itself. So you've still got this extra buffer of borrowing power, and you can actually save more. And that helps you then get into the property market. And if your property is growing faster, well, what the idea is, if you can buy multiple investment properties, potentially 2 or 3, and it's growing faster than the Sydney market, you're actually beating the market in terms of growth. And then later on, you can sell down and come back into the market.
Do you find that most people, when you explain this kind of strategy, are surprised?
I think it is becoming a bit more common now, mainly because they don't have any other options, right? Because then when they look at the numbers, they're just like, yeah, it's not going to work if I have a mortgage at that sort of value. So I think people are starting to come to terms with it, but it is still a very new concept, right? Because a lot of people think that rent is dead money. And that's certainly what I was taught in the beginning when I started investing. My parents were like, oh, don't rent when you can buy your own home. But they didn't really understand the opportunity cost of investing or using your cash into investments. So I think it's definitely something that is becoming more common, and people are getting used to it. And starting to definitely see a lot more people doing the rentvesting strategy, especially with such an expensive city like Sydney.
Yeah, wow. That's actually really exciting for you, though. And Aaron, so I know you've only recently started and joined the lovely Jai here.
Yes.
With some of the clients that you've seen, have you sort of found a similar trend where they're coming to you with some form of knowledge already in terms of rent vesting, or?
Yeah, we get a mix. Sometimes people have absolutely no idea, but you definitely get people that come on board and are aware of it. The interesting thing that I notice, particularly with couples, is generally a lot of the time there'll be one out of the two that is more open to the rent vesting strategy than the other. We spoke about that the other day actually. So yeah, to echo what Jai said, it's definitely becoming more common, but not everyone is aware of it, or probably understands the advantages of doing it.
Is there any recent examples from maybe one of your recent clients that you found was a really successful journey, or maybe they'd been waiting and finally kind of decided to take a bit of a leap of faith, I think, maybe the first one there, and buy their own with you?
Yeah, I've had a few good examples recently, actually. So I was a client late last year, single guy in his early 30s. He'd worked really hard and saved about $60,000 or $70,000, which is really impressive and really hard to do. But as we just spoke about in Sydney, it doesn't cut it, unfortunately, if you want to buy a house or an apartment to live in. So he approached us last year. We did a serviceability assessment for him and put a bit of a roadmap in front of him of what we could achieve following the rent vesting path. And we actually managed to buy him, or he bought an investment property. We helped with the finance. So he got in the market and he's really happy to continue with the rent vesting strategy. So that's one example. Had some clients recently that originally came to us wanting to buy a property to live in for 1.5 mil. Again, we did a serviceability assessment for them and looked at their situation, and they just couldn't afford it. I think we got them to about $1 million. So I went back to them and said, guys, this is not unachievable in the future, but right now you're not there. Why don't we look at doing some rent vesting so you can make some money to catch up? Because the problem is, if you sit out of the market and try and save that extra money, by the time you've done it, the market's moved and you're chasing your tail. So yeah, we've definitely had some good success with people doing that recently.
That sounds wonderful, though.
Yeah.
I really like your point actually about chasing your tail.
Yeah.
Because it's constantly moving, right? And I think we have said before, best time to buy is when you can, which I think is such a great point. And I think it's really hopeful as well. It brings an element of, you don't need to necessarily be next or compare yourself with the person next to you or their journey. Just start your journey when you can. And that's a really exciting concept there.
Yeah.
I think the other thing I wanted to add as well is, particularly in Sydney, a lot of people live in high density apartments. They can be great places to live, but my personal opinion is they're not great places to buy. And I spoke with someone recently who had bought a high density apartment about 5 years ago, and it's put on $40,000 in growth in that time, which is really weak. So again, rent vesting, you could go and rent that property. As you said, Jai, the rent's going to be a lot cheaper than the mortgage, and go put that money in an investment property that's going to grow in a much better rate than what you would get.
And that means asset selection is so important, right?
That's
Isn't it?
right. Yeah. The other thing I've also realized is living in apartments is very easy in terms of maintenance. Because I can say this from personal experience, like living in a house, which we thought was our dream, actually very much became not our dream, because we started realizing that you have to do a lot more maintenance, right? You've got to take the bins out. You've got to do all of the gardening, the maintenance. There's more plumbing work as well. Whereas when you're in an apartment, everything's managed by strata. So if there's something broken, usually strata will go fix it.
Yeah.
Right. But when there's something broken in the house, you've got to manage everything yourself.
You are the strata manager.
That's right. And it's just a lot more work, especially the bigger the house. So I'm like, I don't know how people live in 4-bedroom, 5-bedroom, 6-bedroom houses.
All I see is cleaning time when I see those houses, I'll be honest.
Especially if we're really busy, right? And the workforce these days are much busier than what they were before. Like with more time poor, families with kids, I just don't know how they do it, honestly.
Especially with if you're trying to fit in kids, you've got a pet, you're trying to fit in a social life. How many juggling balls do you have up in the air? I'm healthy. I'm seeing friends. Oh, the house.
Yeah.
Oh gosh. So no, I really like your point. Aaron and I have talked about the same. I love living in an apartment, renting an
We
apartment.
can barely keep up with keeping our apartment clean, let alone a house.
Yeah.
Like, we don't have to worry about, as you said, the garden and raking up leaves and stuff like that. So,
Yeah, look, I think there's pros and cons. Obviously, everyone's circumstances are going to be different. Some people love having their own garden and having their own space. But what I'm also seeing and also noticing is there is more demand towards apartment living and high density living, mainly because of convenience too. And usually apartments are usually located closer towards amenities and shops because they can be built next to commercial property. So yeah, that's also another trend that we're seeing is there's more people living in apartments, which means the cost of ownership and cost of renting is also a little bit lower in those sorts of areas. And the great thing about Rentvesting that we haven't spoke about is you can move properties without being stuck in one area. Right? You might not like this suburb, but if you buy a house, you've just paid stamp duty on the property, right, which is a huge sunk cost.
Yeah.
And if you don't like that suburb, you've got to sell the house and move it to another area and then repay stamp duty again. So that's also another thing that I'm seeing is a lot of people are financially stuck in this PPOR because it's not their dream home, right? They think it's their dream home, but it never is really their first, their first property they buy is never going to be their dream home. And the average home ownership in Australia is only about 7 years. So when you buy that property, you're probably moving on in 7 years. And guess what? The first 10 years of a mortgage, you're not really paying down any principal.
No, not at all.
That's mostly interest.
Transactional costs. We haven't even spoken about the tax benefits if you do own in personal name. And some of you listening and watching may have an idea of this, but when you buy a property to live in, you work your job, you earn your income, you pay tax, and then you pay your mortgage with your after-tax dollars, right? With investment properties, if they're owned in your personal name, this beautiful thing in Australia, most people think it's beautiful, called negative gearing. You've probably heard it bandied around the media a bit, but it's really powerful, and we see it when we're doing servicing models for our clients. When you apply negative gearing or you turn it off, the massive difference it makes, the amount of money that you can borrow. But also, and I know for you and I, Valentina, it's become forced savings. So, we've got our portfolio where the rent's coming in, the mortgage is going out, and then we do our tax at the end of the year. All those interest expenses that we've paid on those investment loans becomes a tax deduction, and your other costs, your agent's fees and your insurance, etc. So that comes off your tax bill at the end of the year, and you get a pretty decent refund. Well, that's our experience. And it becomes forced savings that you didn't kind of realise you had.
100%.
Yeah.
Yeah. So I think, people really got to weigh up their options when they're looking at PPORs and Rentvesting and investment properties and really ask yourself, is the PPOR really what you want? If it is, you just got to make sure that's the right goal for you.
Absolutely. Yeah. It is actually interesting in terms of changing goals and moving forwards. How have you found, if you have clients that are struggling with the Rentvesting and they are quite determined on the PPOR at the time, how do they manage some of the cons? Like we've spoken about how great Rentvesting is. Everyone knows the con of the PPOR. I don't have to move. It's mine. I can put a nail in the wall. Those sorts of things. But what about some of the cons that have come up, and how do people manage them?
That's a good question. I have had a couple of clients that told me, Jai, I hate renting and I don't want to rent ever again, which I can truly understand, especially if you have family and you have children, because they don't want to move schools and they've settled and they've got this nice neighborhood. They've got really good relationships of neighbors around there and also school friends and stuff like that. So I can totally understand. Maybe because we don't have kids right now, I can't really relate, but I can imagine if we did have children and we've got a nice, neighborhood, we probably don't want to leave that area. So that's come up a few times because people are just like, we don't want to rent ever again. We just want to have our own home that we can call our home. And we just want security. That's it. And I totally get that. So I think that's where we've then got to make sure we build towards that goal. right? So if they can't get into the PPR, then we just got to focus on saving, right? Saving the deposit that you need. The good thing about a PPR is you can go up to a higher LVR, 90, 95%, usually no problem. So you need to have that initial 5% deposit plus stamp duty. So that would be the first goal, is have that savings goal and work towards that. If you have an existing property, great, you might be able to leverage the equity. But if you don't, then you've just really got to make sure you try and save, cut down expenses, and that would be your main goal, because borrowing capacity is the main resource that you need, as well as the deposit. So if you go buy an investment property first, it can eat into the capacity to then go buy the PPR later. So that's something I'm also mindful of too. So I just really want to make sure what's their goal, and if that goal is the PPR, we want to make sure we have capacity for them to do that.
That's a great way to look at it. Something you said actually just sparked another question. We're talking about goals. If their goal is the PPOR and they do end up getting there and then they change, what if they're a little bit older? You know, their kids are maybe grown up, they've shifted into maybe another stage of life. What about doing this rent vesting a little bit later in life?
Works very well too, right? So I'm not sure if you guys have heard of the 6-year rule. That's a really, really good hack in Australia.
Against
So, yeah,
Ooh,
6-year
I don't
rule.
think I've heard it. Tell me.
It's so good. So if you buy a PPOR, it doesn't mean it has to be your PPOR forever, right? This happens all the time. People buy their first property, they live in it for a couple of years, and then they move out of it. So they turn it into an investment property. Then you have 6 years of CGT exemption, capital gains tax exemption, which means if you turn it into an investment property, and if you sell that property within 6 years, you don't have to pay any CGT. Right?
Do
And
many
that
people
6-year
know
rule,
about this?
not many people know, surprisingly.
What?
I only know because I sold my first investment property, which I had lived in. And so when I lived in it, I had to make sure that I documented very clearly what date I moved in, what date I moved out, got a valuation from entry and exit. And then my accountant basically said, you can use this 6-year rule. And I said, wow, this is so good. So you can basically apply a PPOR and an investment all in one, but you can only claim it at any given time. You can't have 2 or 3 PPORs, right? You can only have one primary residence. So that works really well. So if they already have their PPOR, they move out of that property, it can be an investment property, and they might want to sell that property within 6 years, for example, cash in, and they have a pretty big sum of money.
Wow.
Right? All tax free.
That's excellent. That's so exciting though.
Yeah.
I know age becomes a bit of a barrier for a lot of people, and they go, oh, no, the door's closed. It's, it's over. I should have done it in when I was 25 or 22, and that's not the case, which is great news. Well, Jai, thank you so much for letting me host today. It's actually been really fun. I'm going to hand back to you, and I think that's all we've got time for today.
Great. Thanks for listening, guys.
Thanks, everyone.